Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I want to talk about a lesson that I learned over the years. And when I look back, I had to alter the way that I thought and think of things. I see some comments about people saying it's over. Um, they put a chart pattern up there. They'll say that because we've broken a lower support line, that it's completely over, that we should get out of our stocks and XYZ, um, that people regret buying something or whatnot. And what I think you need to do is you need to look at the market conditions, the thesis, the ratios, and all that stuff. And it's everything's still game on. That's number one for a commodity bull market. The problem I had with my other stocks is I did not hold on long enough. Now remember, I didn't know interest rates impacted the price of stocks. I didn't know the real estate market had that influence, and the demographics had the influence, and the inflation, deflation. I didn't know any of that stuff back then. I was a brand new investor. So I mean, I saw things, I learned things early in my investing life in the mid 2000s, late 2000s, and so on. I didn't piece this together till later on when I had access to information a lot more easily. So that came a lot later than the beginning stages of the mid 2000s. And I also had to figure out what I needed to look at. And that took some time for me to figure this out. It wasn't an overnight thing. But I will tell you this, I did not hold long enough. And that's why I do not sell in and out of these companies. On the short term, things are not reliable enough, in my opinion. You can tell by this pullback that you can necessarily predict, and you're going to get all these naysayers. Oh, you can predict it. It's like, okay, how come no one's a multi-billionaire that's a short-term trader? Zero, zilch. Because the billionaires don't short-term trade. They buy companies, they build companies, they take large leverage bets, and they ride it the entire trend. That's how they make their money. They ride the big trend. And I had bought in a lot of stocks in early 2000s and 2009. Some of them were the exact companies I should have bought. They were excellent picks. I didn't hold long enough. Period. I did not hold long enough. Every single question that I have in terms of not making as big a gains, I didn't hold long enough. So what I'm doing is I'm identifying the market conditions. And when I look back, if I had known what I know now, holy smokes, I'd smoke this thing. The problem is, even when I was younger, I did not hold long enough. It always comes back to that. I did not hold long enough. I got scared. I sold out. I got this. I sold out. Now, I'm going to give you an example, and there was a pretty big pullback here. So I'll start with Chipotle. All right. I bought in right when they went public, over in this general vicinity of $45. I had a good stake in this, a very good stake in it. And I bought other companies, even in this time frame over there, as I was working and accumulating. And I had it in a 401k. I had a whole bunch. I called it the Dream Team portfolio. And then my company got bought out in 2011. And then they transferred everything out of it because the company owns your 401k. You can't have any say on it unless you basically leave the company. At least if you wanted to keep your money in the thing. And I should have done that. I would have made more money even than working. And in 2012, they sold everything out, liquidated it, and I had to go into these stupid index funds. Anyway, back to the point. CMG, I had a bunch of stock here. I wrote it all the way up, and I sold it on the way down here. I probably sold it somewhere in this range in here. It was basically a double for me. A double. Now, that was the 2008 crash. This was the housing market crash. We could avoid this knowing this. But even so, even in these little movements over here, we saw peaks of $67 all the way pulled back to $45. So 67 to 45. This particular sector isn't as volatile as, say, a lot of the commodity sectors, especially something like uranium. But I should have held through this. I should have held through this pullback too. And someone was, they tell you $150 all the way back to about $40. They'd say, oh, if you had bought in somewhere up here that you'd have to make all this return to get back to the top, it's not worth it. They have all these sayings. And you know what I'm going to tell you? It's complete garbage. All that is garbage. So what you want to do, and this is obviously an opinion of mine, is identify the big trends. Don't worry about the short-term movements. If you get a good short-term movement and all the trend is still intact, that is a buying opportunity. You buy the heck out of it. So some of these companies, and I'll get into them later, and I'm going to kind of scroll through Chipotle here. This right here wasn't a selling opportunity. This isn't a sell. You should buy the living heck out of it. I should have bought here. I should have bought here. Now, as this comes through, I'll just show you what came next. So we should have been buying in this general vicinity. There's your lead in that I always see. So what you almost always see is you see a downtrend line. You break the downtrend line. I don't know why this is. You break the downtrend and then you get a higher low. Oops, I thought I had it in this. You get this higher low. We should have been buying. You buy the breakout and you buy the back test. Sometimes the back tests go down here. Sometimes they do. But I should have been buying. I should have been buying at $50. I should have been buying back there at 45 like I did. And I should have just held on and held on, because now the market conditions in 2009 were ripe for recovery phase of real estate, and the stock market does very well. And then what you do is you get these breakouts where it consolidates for 09 to 2010. This is a full consolidation year. Oh, well, that's time. That's a missed opportunity. That is a missed opportunity, Andy. You should have been invested somewhere else as this was going sideways. Guys, I can tell you this. I don't know anyone who's ultra wealthy off day trading. I don't know anybody. I don't know a single person. I don't even know that many. Getting the big trend right is where it's at. And if I had bought in a whole bunch at 45 and 50 bucks, you're up 100% at this time. And you're a year in. You're still beating all of those performance, the performance of managers. And look, it just keeps going up. Now, here comes a pattern. And you'd almost say, well, this could probably pull back. This is a head and shoulders top, right? We got this head and shoulders top. Oh my gosh, we need to sell it. Make sure it doesn't break the downtrend, blah, 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 blah. Okay, I get it. And we use technical analysis to get our buy point here. We didn't break down, and doesn't even matter if it broke down. Does it matter? Maybe not. But look, we keep going up. Well, now we're up at $260. Our buy point was 50 bucks. Now we're looking pretty smart. But what does this look like? Is this a head and shoulders? Is this a head and shoulders? Yeah, it sure looks like it, doesn't it? So we got a head and shoulders. We should be selling, right? Whoa, whoa, whoa. Why is it not going down? We have a head and shoulders. It broke down, but why is it going back up? Because the big trend's intact. You just hold on. Comes on up. Get the little squiggles. And we are continuing. But look, we hit a problem. We hit a problem. We went to 437. You'd have over 8 or 9 times your money at this time. And we should sell. We should sell. We got E. coli scare. We got the E. coli scare. But guess what? The trend is intact for the big, larger picture. So this was a buying opportunity at 237, not a selling opportunity. You should be accumulating it. And I know, looking back, it's 2020. I get it. And here we are, running up again, running up again, running up again. Well, now we're at 10-bagger status. Oh, no, it's a head and shoulders top. We should sell. Get out, right? No, 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 no. Hold on. The trend is still intact. The recovery phase is still in process. Low inflation. Stocks go up during that time frame. You hold on, you hold on, you hold on. Oh, no, we went all the way back to $400. From 800 almost, 760, down to 400 in this big old pullback. What should we have done in this? Now, no one knows. We still have the market conditions that are ripe. No one knows this right here, that this was going to do that. And what we should have done was bought more down here. We should not be selling at all. And then look at, we're going back down. Oh no, this is going to zero. No, it's not. And we go all the way back down to 270 on Chipotle Mexican Grill. I think, okay, this might have been the scare. And the best thing you should have done during this time frame is buy more. And here we are, rocketing higher, rocketing higher, rocketing higher, rocketing higher. Look at that. $1,500 and something dollars. Now, I will say this, we are getting towards a market that's getting a little bit roundy. Now, would I sell Chipotle? The answer is probably no. If you were going to hold it and you were going to hold it through this entire mix, you could probably just continue to hold on. And selling at all would be too early. But I would have been pretty tempted in the time frame of the 2020s to be offloading it in this time frame here to go buy a bunch of oil stocks, because the commodity boom is coming. And here we are kind of breaking out of that trend. Now, if you're a long-term holder, it doesn't matter. Just hold on to it. Don't ever sell. You'd make more money never selling than you would trying to time all this stuff. And right now it's at 1280. 1280 over that time frame. And let's just do a little bit of calculation here. 1280 divided by your initial price of 45 is a 28 bagger. 1280 divided by $50 on that other one would have been 2560. So 25 or 25.6 times your money. You put in $10,000, you'd have 256,000. If you put 10,000 and 10,000, you'd have something on the lines of $575,000 from 20 grand. How many people have made that amount of money? How many people on this channel have made that amount of money? Probably not that many. Now, all you had to do was buy it and hang on and just buy at a couple of crucial areas. Adding in, cost averaging in would have been the ticket and just holding on. Now, what's the difference between what we have today and this scenario here? And I also did Beidou wrong. I bought it at $100 split adjusted. It was 10. I bought it way back here in the same rough time frame as I did Chipotle. It was roughly the same time frame. I bought it like $10. So I bought it somewhere in this time frame here, and look what came up. It came all the way up and pulled back. Basically, I was at what was it at? 10 to 40, and then it came all the way back to about where I bought it. The best thing I could have done was hold this thing the entire time, and probably even still hold it. It's just in a big consolidation pattern at this time. But I did not hold long enough on all these for the most part. And I held some of this all the way through it. I've held some of these stocks a good long while through them, but I didn't hold my original amount of that entire amount. I should have just held. Now everyone's, we're coming through this market and we're having the overall markets kind of decline. We've got some declines in the S&P 500. We've got some declines in the NASDAQ, and they're starting to speed up. This is a liquidation event per se. Everything's kind of getting sold. You can see this thing really dive bombing out. It will end at some point. It will end. And when you start looking at the CRB index to S&P 500, you've got this nice, good move where the commodities are being much more resilient than the S&P 500. The money is rotating. You can see it in the ratio. And remember, that's what we use for our valuation guide. The CRB index is increasing its valuation against the S&P 500. That's exactly what we want to do. We want to beat the S&P 500 so we can buy more stock in the future. I think it will come back up to these tops, at some point. It's going to take time. And there's going to be pullbacks in this ratio a little bit. I don't think major ones, maybe. But I think we're going to get a big pull here. But everything right now is looking positive for the CRB index in relationship to the S&P 500. All of the data that I look at is positive for oil, is positive for natural gas, is positive for uranium, is positive for all of the materials going into shortages of those materials. And if I were to look, and I'm going to pull up let me see if I can find the presentation. It might take me 2 seconds here. So 1 second, guys. And what I'm looking for, and hopefully I can find it. It's under, nope, it's not that one. Well, anyway, either way, what I was going to pull up is the shortages of all these different materials that are out there. There are shortages of all these different materials out there that are in front of us. And if those are right, if they're at all right, and we have the ratio still good, well, then I just need to hold. There's no point of trading in and out. The least likely time to make a lot of money is on the short term. One, you don't make that much. I mean, you can make 20, 30, 40, 50, maybe even 100%. But that's not that much. It's not 28 times your money or 30 times your money. And the most reliable way is to just stick with the company that's going to be making more money. So the name of the game is to buy low. And if we are coming back, if we're pulling back, and I'll look at uranium here, and uranium in terms of the ratios still look absolutely excellent. They're still on top, sitting on top of patterns. They still have small pullbacks if they have pullbacks, and they're still looking very well, like it's ready to go at some point. And then you look at, I'll go back up to like Forces Metals. I know somebody was making a comment on Forces Metals because it broke down to the downside of its pattern. It's right here. We're coming back down for a retest move of the breakout. And maybe we get all the way down there. The question that you have to ask yourself is, what are you going to do when it gets down there? What are you going to do when this gets down there? How are you going to react? And what have I learned throughout all of my investing? If the market conditions are present, we come on up and then we get a sell-off back down, that is a retest move. And what do I do on retest moves? I buy the retest. I have learned that over my years. And obviously, I'm going to wait for the buyers to strengthen this up. And I know people get scared. They get scared, and and I'm not telling anyone to buy Forces. There's a whole bunch of different companies. They're doing kind of return moves, and maybe we pull back even further than this for some of them. All that means is you got that first initial surge, and this is the first wave. So if we look at, say, a trend-based fib extension, and this is our first wave, and we come on back to maybe the second wave is somewhere here. What that means is a lot of these go to 1.618 in the third wave. We could have a third wave up to 62 cents on Bannerman. And sometimes they run even more than that. They can go all the way up to $1.43 on that. Hard to say. I'm not telling you the predictions, but I think what's happening is we've had our first initial surge. And this first initial surge is larger than the other bull markets. So this here is a consolidation period, and it scares everyone out. But this is the first wave. Now we're getting our consolidation period. Then we're gonna get a big third wave. The third wave is the biggest, longest wave moving. At least that's how I'm looking at it. I'm not an Elliott wave expert, so I'm not trying to say that, but I think this is the first initial pulse move higher, and that we're getting a consolidation period. And that means that these moves, at least in Camco, the Camco moves, and I can go to Camco and show you. The Camco move from the bottom of this to the top, from the breakout to the top here, is 242%. The last bull market is back here. The first bull market was 151% before it had that nice big pullback. And it had about a 50% pullback before, and it was still in that bull market. This was the first wave. The third wave is this big guy coming up. And then the fifth wave is this guy right there. So this is a big third wave that was coming up. So I think that we are very similar to this 792 days where it ended and it started to go back up. Right now we are at 700. We're at 761 days. 61. Let me move it over just a hair. There's 791 right there. So it's about the same as last time. And it's lining up with basically June 1st. So we're coming up, and this is probably going to end somewhere in this period. And then we're going to move on higher. And it's a bigger fractal. It's got a larger move from this peak up than the previous one, which means that the move coming is probably going to be bigger because it's a fractal. It's the genetics of the move. It's telling us how big this is. So all I'm saying is the lesson that I learned is I didn't hold long enough. I did not hold long enough. I'm not making that mistake. I've studied the living poop out of all this stuff. And right now, I think the drivers are the demographics and interest rates and inflation. And if we have any hiccups in between, I'm holding through it. I'm going to buy more on the pullbacks. You've heard me say this time and time again. And again, I didn't hold long enough. I did not hold long enough. And that goes for a whole bunch of different stocks. I should have, when I was early, not traded in and out. I should have just held them. And if the trend is good, and the trend is good still, I'm going to hold. What other option do I have? Where else am I going to go in this market? And this pullback isn't even like that. I mean, it's 32.61 to the bottom here of 2065 or so. Is it 2078 is where it's at right now. This pullback and those other ones were pretty big pullbacks that I would have held through. This pullback is 32.61 divided by, or minus 20.78 divided by 32.61. It's a 36% pullback is what we've got. And if you use, and this is from the bottom of it. Oops, wait, I got the wrong one on here. I'm going to go back to the fib retracement. If we put a fib retracement on this, we're right here, and we could come back to the 50th percentile. We could even come back all the way to $16 if we come all the way back down here, which is a pretty normal pullback in a market, a 0.618 retracement level. And we might get back to $16-ish. Of course, you're staring at me. There's the thing there. We could come all the way back to $16-ish, this level right there, if it happens. And I would still be highly bullish on it because the market conditions are still good. Now, everyone's going to get scared out of this thing for the most part, I think. I'm not, but a lot of other people are. The question is, what are you going to do when we see this bottom? My experience has been buy the dips. Hold the rips, buy the dips. Don't worry about what your account value is necessarily doing. We will most likely be rewarded very highly buying these pullbacks and holding on through this bull market. We are in a bull market for commodities. We can see it in the ratios. Platinum is starting to come back. We're just going through kind of a liquidation event. And I know a lot of people get scared. So what I'm doing, and you guys can either follow it or not, it's up to you. I'm holding through it. We've got broken down trends. The consolidation periods, this is a big consolidation period. This consolidation period is broken. This is a big consolidation period. That consolidation period's broken, and we are in an uptrend. Identifying the big moves is where the big money is made. And those are the two fractals I looked at. 791 days, 792 days. We are coming up very soon. And the timing may not be perfect like that, okay? And we may have to go sideways. We may have to go move around and all that. But the big picture move is up. And I'm not trying to predict anything. All I'm going to say is I'd be better off identifying the trend and buying the pullbacks. And whatever I look at, when I look at the big picture view, consolidation period, breakout, retest. You buy the retest in my experience. So this is SCCO, and I highly doubt that this, it could come lower, but I just highly doubt that this trend is broken. The demographics are still there. Everything I look at is still positive for a move on up. And it doesn't matter what chart you look at. It doesn't really necessarily matter what sector it is. They all exhibit this. This isn't just a sector that's doing this. It's across the board. And we're seeing that the money is flowing out of quite easily the S&P 500 and the NASDAQ. It's also coming out of bonds. And it's not going to be a straight shot. Things will go up and down. But as long as you get the big trend right, as long as you focus on those market balances out 2-3 years from now, as long as we are short on inventories of housing, of oil, of all these commodities, the trend is still intact. And again, what did I do wrong? And what was the lessons I learned from before? I did not hold long enough. So what am I doing? I'm holding a lot longer. And some of my companies that I've bought are up over 20 times already. But again, that I have to be mature enough and smart enough to know that the trend is still intact. And what I've learned from my mistakes in the past is I need to hold longer, and I need to identify and focus my efforts on the trends and valuations and the ratios. That is what I've learned over all of my investing. And if you guys want to ride this higher with me, join the Finding Value website as a platinum member and ride it up with me. I'm going to use absolutely everything I've learned in this bull market. And if this sounds exciting to you, or it sounds like it could help you out during this bull market, well, join me. Join us on the channel on the website. We have a Discord channel. We talk on there as well. Join us. Let's ride it together. And I will be a bull until the data tells me otherwise. The data has to tell me, not opinions, not projections, not sentiment, none of that. It's got to tell me in the data. All these charts are big picture view things breaking. And none of this is going to be perfect, guys. And we could break out of chart patterns up top and come back and do retest moves. We're going to do all sorts of funky stuff in the beginning of this bull market, which I think we're in the beginning stages of a massive bull run. So hopefully you don't repeat my mistakes, which is trading too often, looking at the price and determining short-term movements as a change in the trend. It's not right. Learn, go to the website, become a platinum member. I've got a whole bunch of educational stuff there. It talks about ratios, it talks about market conditions, it talks about demographics, it talks about real estate, it talks about interest rates, it talks about all of those things. Read it 4 or 5 times each. I'm not joking. Read it 4 or 5 times, back test the entire thing. Back test it. Now here's something else you guys want to see. Here's the S&P 500. This is what you want to know. I'm going to put on log to blow it up. Consolidation period. This is where commodities, probably commodities. I don't know about back then, but I didn't look all the way back here. But this is a commodity bull market here. I'm sure there was a commodity bull market that was brewing in this general vicinity. But remember, everything was plentiful back then. Quite plentiful. They were like finding nuggets above ground everywhere. This is where you want to be in stocks, these in-between trend movements. And there's big, large pullbacks in them. 1987, oh, I should sell. It's a recession. No, hold on. Real estate demographic coming through. You ride the bull market in commodities. This was a demographic change here. Ride the bull market in commodities. Now we're starting to come back. I think we're going to go into a period that looks similar to this, a sideways motion. Now it's time to buy commodities. You want to hold on. Ride the big trends. That is what I've learned. Do not sell early. Ride the big trend. Buy on dips. That is what I've learned. And if you resonate with that, and your time frames can be like that, and it's not going to be easy, guys. This isn't going to be easy. It's not going to be super easy. I mean, I've shed a whole bunch of money from the top. But guess what? I'm not investing to have my account be at the top every single day. I mean, it's great. It's easy. But I'm investing for this entire trend. And hopefully at the end, my account will be insane. But I'm going to have to ride through it between here and the end. If you can't ride through it, you don't get the payday at the end. And that's what we're all here for. At least I'm here for the big payday at the end. So if that interests you, subscribe to the channel. Give me a thumbs up. Subscribe. Subscribe to the website. Platinum membership's the one that I would do if you guys need help riding this commodity bull market and the companies. And again, guys, I'm not going to call everything right every single time either. I'm not going to call every company right. I'm trying my best. And that's all you can do. That is all you can do. And if you can ride the big trend, and we're getting sticky with the overall market in this deleveraging type event, I can't be not in them. If the market conditions are ripe and the ratios are good and everything's telling me to be in it, I'm in it. I don't care what other people say. The short term's not going to unhitch me from this ride. Put it that way. So, well, the video is getting a little long here. We'll cut it here, guys. We'll catch you next time. This is Finding Value.